Okay, so today we're going to talk about the moving averages that I use on both the daily charts and the intraday charts. We're going to start with what I use on the daily charts today, with the first example being the daily chart of IWM. And these are the same ones that I use every single day, okay, on a daily chart or higher. So either daily, weekly, or monthly chart. These are the averages I use. I use the 200 simple, which is the pink average here. I use the 50 simple, which is the green one here. And then I use the 513 EMA combo. Now in this case, let's see, the 5 is the blue and the red is the 13. Now basically, if the 5 is below the 13, that's bearish. If the 5 is above the 13, that's bullish. Okay. Now the most ideal time, for a trade would be when all of the moving averages are on the right side. So for example, in this case, if you're looking at the fact that price is underneath the 200 simple, underneath the 50 simple, and the 513 EMA combo is in a sell mode with the 5 below the 13, which side of the market do you think is better to trade on? Because all of the moving averages are on the side of the bears in this case. So typically, and it's not going to be 100% of the time, but more often than not, when you have all of the moving averages on one side, that's the better side to trade on. Okay, so in this case, we're looking at IWM and noticing that, these are all basically supporting the bears, then the better setup typically is going to be on the sell side. Okay, so that's something to be aware of. Now, there are going to be times where you have mixed parameters, and then when you see that, typically you can make a case for either side, and as long as you have your risk defined with the levels, that's fine. But it's going to be better when you have everything on the right side. So, for example, let's actually take a look at the 30-minute chart in IWM. The 30-minute charts and all the lower time frame charts, typically I'm using the 834 EMA combo. Let's get that on this chart here. Okay, so the 8 is going to be the blue average and the 34 is going to be the red. And the way that you look at it is that if we have the crossover to the upside, then the bulls are in charge, okay, with the 8 above the 34. Or if you have it the other way around, that the bears are in charge. Okay, and again, it's not going to be 100%. It's going to be helpful, but not 100%. All right, let's see. But typically, what you want to do is look at the averages on both the daily chart and the intraday chart, and then the best setup, for example, like with the IWM, since all of the moving averages are on the side of the bears, if we then also had the 30-minute chart turn back to the downside with the 834, that's when we're going to want to look at the sell side there, okay, because it will match up with what's going on the daily chart. Okay, hopefully that makes sense. Anyway, and then let's also just take a look at one of the components of the daily averages. So let's look at the 513 EMA combo. Okay, now this, I want you to look at, different charts with this, because with some charts you'll see that it respects this very well, like the S&P or Apple or IWM, but some of the other charts do not. Now, if you look at another chart and it's too choppy, then don't use this 513 crossover as far as this helping you to stay on the right side of the market. So here, for example, here you had the 5 cross above the 13 in S&P cash. Where's my, oh, here it is. Right over here. Okay, so that was considered to be a buy trigger, but also as long as the 5 is above the 13, your focus should stay on the buy side. Okay, ideally you trade on the side of the 513 also. Okay, now here you didn't have much of a decline from that area, but you know, as soon as it goes back with the 513 being on the buy side, then you know that it's a safer bet to continue to look at the buy side. Okay, here we crossed down for a short time, but right back to the upside. So it's not 100%, like I said, but if you look at all of these bars and all the times that the 5 was above the 13, that you did see some higher prices. Okay, and like I said, it's just a piece of the puzzle. You know, it's not the end all be all. But here again, once let's say when this market got hit pretty bad over here, this is one of the things that will help tell you when it's safe to go back in on the buy side, for example. So here you had the crossover with the 513. Notice that it didn't cross back to the downside until over here. So that's the one thing that I want you to know. Ideally, you want to trade on the side of the 513. Ideally, you want also to have the 200 and the 50 on the right side. Now, if you don't have the others, at least have the one, and that's if you're trend trading. Okay. Now, the other thing that we look at for trend, besides the averages, is going to be the pattern of the market. So let's see. For example, here's the 30-minute chart in S&P Cash. Now, the moving averages have us in a buy mode at this point. But here, what do you also have? Well, you have the beginning of a new pattern of higher highs and higher lows. So when both the moving averages and the pattern tell you that the buy side's the better side, then that's where your higher probability setups are going to come from. Are there any questions on that? All right. Also, I know I've shown you this in the past, but here, this is a way that you can help identify, you know, what makes sense as far as some of the best setups. If you use, let's see. All right. I think this is the same, but let's double check it. So for example, if you keep track of where we're at with these moving averages, okay, so first the 200, the 50, and the 513 EMA crossover, and then also when you go to the 30-minute chart, the 834 EMA crossover. If you have everything on the same side, actually, let's just do that example in IWM. I only switch to the 513 if you want a more aggressive swing trade trigger. But as far as, you know, defining the trend, I'll use the 834 on the 30-minute chart or any of the other lower time frame charts. Okay, so if you want to use this, you know, to help you stay on the right side of the market, so here's the IWM, and if we're looking at the daily chart and the 200 SMA, we're in a sell mode with the 200. And then if you look at the 50, you know that the 50, our price was below the 50 also, so I consider that to be in a sell mode. Then the 513 EMA crossover was also considered to be in a sell mode with the 5 below the 13. And then if you look at the 30-minute chart though, okay, now this one with the 834 is in a buy mode. So what you really want to do with this is wait until this shifts back to a sell mode, because all of the daily moving averages are still suggesting the sell side. So if we do cross back over to the downside and we have a setup, that's definitely worth looking at, because then at that point, after the shift, you'll have all the moving averages on the right side. Now, it's not always going to happen. It's going to be, you know, different on a lot of these charts most days. For example, let's go back to the S&P. So now in the case of the S&P, we're actually above the 200 simple, but the 50, price is below the 50, and with the 513 EMA crossover, it's in a sell mode with the 5 below the 13. Okay, so you don't have everything on the same side, but when in doubt, the ones that are most important will be where are we relative to the 50 simple moving average, and then where are we with the 513. So in the case of S&P, the fact that both those are in a sell mode, okay, and actually we're not in a sell mode on this 30-minute chart right now. Again, what you would want to do is wait for a shift on that 30-minute chart back to the sell side. Then that's going to be a better setup. So where price is relative to the moving averages helps you identify the trend, or what market or what side of the market that you want to be on if you're a trend trader. Now, obviously, you won't have the moving averages on the right side for any of my counter trend trades, but you have to remember that those will not be as high probability as the trend trade setups. All right, let's see what else. All right, actually, let's see where we're at with, well, I'm going to need to open up my other workspace here. All right, hang on one sec. Yeah, so remember that 513 is more for, if you want a slightly more aggressive swing trade trigger, and you'll just have to look at the chart and see whether there are too many false triggers to decide whether or not to use it. All right, here we go. All right, so for example, in Google, all right, so if we look at this chart, we are above the 200, so that's in a buy, but we're below the 50. Let's make sure. Yep, we're below the 50, and the 5 and 13 are in a sell mode. So we have the 50 in a sell mode, we have the 513 in a sell mode. Now, as far as the 30-minute chart, let's take a quick look at that one. Okay, so the 30-minute chart is actually in a buy mode, so you have no reason to be short this one yet. But it is definitely one that I would want you to look at. Okay, so since these two are in a sell mode, and this one's in a buy mode, we'd have to wait for the 834 to cross to the downside before having all of this line up for a high probability setup. Okay, and then again, the other things that I look at as far as trend, you just look at the pattern. Okay, so is this a general pattern of higher highs and higher lows? Then that's bullish, and it shifts when you start to go the other way. If you take out a prior swing low, that's one of the reasons why we have the stops underneath the prior swing lows. All right, and then again, these, you can color code this if you want, where you have, the sell side would be red, buy side would be green. This way you have it color coded. Again, whatever works for you, but I would recommend using, a chart like this where you note where we're at relative to the moving averages, okay, because it'll help keep you on the right side. Also, there are a lot of times when I'll be asked for a chart like this. One of the first things, this is MELI, one of the first things that I look at on this chart is the fact that you're below the 200, you're below the 50, and the 5 and 13 are still in a sell mode. Okay, so this one, even though, somebody might be looking for, where it's going to put in a more important low, we do still have to focus on the sell side if the 30-minute chart starts triggering that way. Okay, why? Because not only are all the moving averages on the side of the bears, you're also looking at a bearish pattern of lower lows and lower highs. Okay, so if you're looking for the trend trade setups, you want the averages on the right side. Are there any questions on any of the charts I've gone over so far? Okay, let's check. Okay, yeah, I think I wanted to look at a couple more that have just the 513. Okay, so again, this is a daily chart in Tesla. And ideally, you want to have the 513 on the right side. So for example, it would have been extremely helpful to know that you really didn't want to look at the sell side while the 513 was in a buy mode with the 5 above the 13. Okay, it works pretty well, in something like Tesla. It also works pretty well in something like Apple. Okay, here's a daily chart of Apple. Again, helps you stay on the right side. Here is an example of where it crossed to the upside. And guess what? Didn't cross back to the downside until here. Okay, some people actually will use this for a stop, if it crosses the other way. But it definitely helps keep you on the right side. So let me see what current markets we're looking at and where we are at. What's nice in the case of Apple, it looks like, yeah, we just had the slight crossover, the 5 crossing back above the 13. You have price back above the 50. And we already had price above the 200 simple. So in the case of Apple, this is one that we're going to want to focus on the buy side. Okay, for me, I don't really have a reason to look at the sell side here because we cleared that important hurdle that I was talking about in the update. And we did have time and price at that last low, and this is your potential upside target. Now let's check Amazon. As far as Amazon's concerned, now this is another one that we have to watch for a possible fail in the coming sessions. Why? Well, you're below the 200, you're below the 50. The 5 and 13 has been in a sell mode since here. Okay? So when this crosses back to the upside, then we're really going to want to pay attention to it. I mean, we have seen some buy triggers on a 30-minute chart, but you don't have the daily chart backing you up as far as being on the buy side in Amazon. Okay? So just note that. And if, for example, we have all of the moving averages stay on the sell side and we start to see sell triggers against resistance and the 30-minute chart cross to the downside, then you're definitely going to want to look at the short because then you'll have everything matching. I mean, right now you don't because the 30-minute chart is in a buy mode. Okay, we have another, Facebook, I guess Facebook has earnings, so this is going to turn into a crapshoot through earnings. I have no idea what it's going to be or which way it's going to take it. But typically, let's say we didn't have earnings, and once again, you notice that we are looking at, an overall bearish pattern, lower lows and lower highs. Below the 200, below the 50, 5 and 13 are in a sell mode. So you'd want to look at the sell side. So let's say we got up into one of these areas of resistance and notice that the 30-minute chart is in a buy mode. So you wouldn't short it yet. You would wait for the 30-minute chart if it gets into resistance and then wait for the 30-minute chart to trigger. Back to the sell side. Then at that point, you would have both the daily chart and the 30-minute chart in alignment. And that's pretty much what we're looking for. So some of the charts that are just very ugly. Let's see. Yeah, like PayPal. Okay, if you look at PayPal, you're below the 200. Simple. You're below the 50 simple. 5 and 13 are in a sell mode. So even though a lot of people want to try and call the bottom, and you can look at counter trend trades, but you have to play them really tight, because if it doesn't continue to move in your favor, you want to get out of the way. But in this case, we would still be setting up the sell side. The sell side would be a better setup. Also, the one other thing as far as setups like this, when you're below the 200, below the 50, 5 and 13 are in a sell mode, you do want to set up the resistance. But I also call this, once I set up pretty much with using symmetry and any of the other price retracements or extensions, the focus should still be on the sell side at this point. So when I take all of these prior rally swings, project them from the new low, unless this is a major low, typically you're going to want to focus still on the sell side when you have a bearish pattern like this and all the moving averages are on the side of the bears. So for example, this, I'm going to call this a royal setup, which just means that on the daily chart, all the moving averages are on the side of the trade setup. So here, this would be a sell setup, 173.43 to 174 even. Okay, but what would make you take that? You can definitely look at these zones for day trade decisions, but I wouldn't keep it overnight unless it shifted on the 30-minute chart. So let's take a look at that real quick. Okay, so at this point, the 30-minute chart in PayPal is in a buy mode because the 8's above the 34. So you wouldn't short yet, but let's say we get up into that resistance, either here or here, and then it crosses back down to, or back to the downside, then look at taking a short position. Okay, just assuming that something's going to hold a level, that's not going to work very well because there are tons of levels that are violated every single day. And that's something you need to be aware of. And that's why we use the triggers, because it will filter out so many of the zones that the market will never respect. All right, are there any examples that you guys want to go through? Or do you have a better idea of what I'm looking at with the averages? And again, I would highly recommend using, something like this, because when you have, everything, for example, like let's say this goes into a sell mode, this is going to be one of the higher probability setups. Because this is in a sell mode, this is in a sell mode, this is in a sell mode. When this turns to a sell mode, then we have, matching time frames. Yeah, I have, I can probably post, this is an Excel sheet. I'll have to see if I can post Excel on the site or not. All right, I think that's pretty much it. Are there any questions about anything else? Oh, Tesla? Well, all right, if you look at Tesla, you're above the 200, simple. You're below the 50, simple. And the 5 and 13 are in a sell mode. So I'm considering this a counter trend rally where you need to be prepared for a failure at any point, because of where we're at relative to the 50 and the 513. Those two are going to be more important than the 200. Netflix also very much in a sell mode still. Okay, as far as the daily chart's concerned. Now the short-term chart's definitely in a buy mode. But here, you're below the 50 You're way below the 200, and the 5 and 13 are still in a sell mode. So should you watch for a possible failure on the way up? Absolutely. But when should you take a trade against it? Well, I'd typically say either the 15-minute or the 30-minute chart. If that triggers, then look at that, because then that will be in agreement with what the daily chart's giving you as far as these averages. This would suggest that this is only a counter trend rally. Or at least, that's what we're assuming it is, unless we start to see it continue to push through resistance on the way up. But as far as these averages are concerned and the pattern, it's still in a sell mode. Friday. All right, hang on a second. I don't have my NASDAQ chart here. Let me grab it. And you're talking about last Friday? On what time frame chart? The only way that we were able to, predict a counter trend rally is because we had timing. If you remember the timing on the daily charts, and also we had this gorgeous symmetry in the case of S&P. But, that was the information that, told us to look at a buy against this. And remember, when we started pulling back was to also watch for a possible resumption of the rally above this last low because of the timing and price. But it was definitely counter trend. When we tested this area, it was definitely counter trend. Now, if you bought against this support initially, using, the short-term charts, that's just good for a day trade, but didn't want to really keep it overnight until you at least triggered on a 15 or 30. I find the 30 tends to be more accurate because you'll have more false triggers using the 15. Okay, so in the NASDAQ, all right, so this pretty much, the buy in NASDAQ, the only support we really had was this 1272 extension, which is why I say, it's not an official setup, but there are times where you will get a huge move off of an extension. You did see a huge move off of this low. So, it's worth watching. And then as far as a reversal, so all the moving averages and NASDAQ are on the side of the bears, and still is. You're below the 200, you're below the 50, 5 and 13 are in a sell mode. But you at least did see crossovers on the 30-minute chart. Now, it would be better if the daily chart was also on the same side, but because they're not, that's why this tells us to be prepared for a failure at any time. Right now it's still in a buy mode, but here's the crossover, here is the last crossover, the 834, and then you also took out a prior swing high here. So once both those things occurred, it was okay to take a buy and risk underneath here. Does that answer your question about the NASDAQ? Okay, somebody's got their microphone on. So annoying that these mute features don't work. Okay. All right, so any other questions besides, the averages that I use? I mean, obviously when they're all on the same side, then there's pretty much no real question as far as which side you should be focused on. And also, anyone who's been around for a while, you know that I don't buy breakouts. I wait for pullbacks. Okay. All right, well, doesn't seem like there's yeah. Yeah, there's definitely certain people we want to mute, and I'm just really scared to death when somebody puts on their camera, because I know some people trade in the nude, and I don't need that shocker in the morning. All right, if there are no other questions, I'll just quit the video here. I'll see if I'm able to post this. If not, I'll have you just email me and I'll give you a copy of it.